Earlier today being February 2nd, precisely actually 12:29, we tweeted out this tweet to our followers, to our good friends at StockTwits, and our good friends at InvestFeed the following tweet that we will put on a vertical put spread on Amazon just prior to tonight's earnings at $820, $720, maximum risk $16.50, and with the notation that the front leg, the 820, was purchased with an expiration of February 17th, and that the back leg, 720, was sold for an expiration of February 3rd. Now, anybody picking a direction for earnings has at least a 50-50 shot. But I'd like to share with you in the following video how we chose the direction of the earnings, how we chose to structure the trade the way that we did. Because sometimes, especially with a stock like Amazon, you might even guess the direction right, but if you don't structure it, you could still come up snake eyes. I'm Bag of Dawn at Stock Market Caddy, inviting you to sit back and just watch for the next few minutes something that is probably rather new to you. And we are a mentoring site, so this is really meant not to gloat about a winning trade. Anybody can get a winning trade, but it's meant to help teach you and open your eyes to another way of trading. Here goes. You're looking at a pretty standard weekly chart of Amazon, courtesy of Stock Charts. And this is where she was this afternoon, up around 8:43 or so when we put on our trade. Now this chart you would have seen, a million times. And how many times do you hear people saying, if a chart is working from the lower left to the upper right, what do? You buy the dip, you go long, you stay long, right? The trend is your friend. The trend is up. Well, for us, this particular chart was rather meaningless. And let me show you what we used. This is the chart that we use today for Amazon, both to gauge direction and also how to structure the trade. It's called a point and figure chart, and this is courtesy of StockCharts.com. Now, price moves up and down, folks, on a scale. Up and down, as you see here. This is not a time-based chart. The earlier chart that I showed you was a time-based chart. What provides trends in a time-based chart is time itself. As it advances, it gives you the perception of trend. The perception of trend, but it's relative. And in our view, we think that it fools the eye most of the time. Point and figure is simply up and down, up and down. Now, I don't have time to teach you everything about point and figure here in this video, but what we like about point and figure is when price is advancing, when offense is on the field, you'll get rows of X's. When defense is on the field and price is, or the sellers are in control, you get a series of O's. Now, not going into great detail, the entry points on point and figure, can't go into great detail right here, but the entry points on point and figure are very specific, and that we like. You can put 500 people into a room on Elliott Wave, and you can come up with 600 different entries and exits. Put 500 people in a room that have been trained on point and figure, and all 500 will agree specifically where the entry was and where the exit is. And that's half the battle. What point and figure showed us today when she was trading up here at about 8 $840, is that the true high in Amazon was right over here. Let's kind of click on it at 840. Amazon had topped out here, had broken down, rallied back up, and was challenging this high. We made an interpretation that the direction was going to be down. The risk reward was going to be down. Furthermore, what point and figure enabled us to do was to be able to place our put vertical spread precisely where we needed it, and that was right here at 820, because we knew that 820 was a key support point, and if 820 broke, realistically it would be down to this level at 805. So what we did was to buy a put for approximately 18 something dollars that expires on February 17th at 820. We went down because we didn't want to cut off our winnings. We went down and sold a 750, they're about 750 put. We collected $2 a credit. So our entire cost of the trade was about $16. And this one will expire on Friday and will in all likelihood expire worthless. Then we will be short, net short, in the morning when Amazon opens at what we expect, where she's trading tonight. We're at 805. And we expect Amazon most likely before the 17th to trade down in this area. So I'll let you do the math. More importantly, we wanted to show a follow-up to our tweet, introduce ourselves, and introduce you to point and figure trading. We do have, if you visit our website, we do have a tutorial on point and figure trading. There are many tutorials out on the net. There's one book by Mr. Dorsey that is very good. But in our tutorial is 3 or 4 years of stock history. In fact, the very first one we did was 3 or 4 years ago with GoPro. It was a short up around $60, and it just so happens that GoPro came out with earnings today and closed at around 9 from 10. Again, point and figure is precise, no gray areas, it's black and white, it tracks price up and down. It's what the floor traders used years ago, and if it was good enough for the floor traders, it's good enough for us. We also automate it, and we also show you in the tutorials where and how we find the best patterns within point and figure, so we know precisely where the stops are. So follow with us over the next, hopefully the next few weeks, and watch Amazon break down now in price as she generates a point and figure sell at 815, and all likelihood breaks 805 and becomes a broken stock and is now a stock to sell. I'm Bagadon at StockMarketCaddy.com. Feel free to check us out, and I hope this was educational and helpful. And just by coincidence, our webpage actually highlights GoPro from back when we made these videos back 3-4 years ago, and we use GoPro as an example. And where did we short it? At $60, a point and figure sell, and it just sold and sold and sold. And today GoPro's earnings happened to come in, and she's closing it I think at $9.